Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, we're pretty flat. We were down earlier, but we've come back up and we're kind of in the flat line right now. Now, there is good news out there. You see, the economic policies, well, they're working. We've conquered inflation. We've won the fight against inflation. Inflation is under control. The CPI number came out, only 6.5%. That's pretty much under control. That's what they'll tell you. Does anyone really believe that the CPI number is really 6.5%? As your price has only gone up 6.5% from a year ago, mine, well, maybe they just shop at different places than me. I'm not so sure about that number, but okay, let's go with 6.5%. Well, people think that inflation is just going to magically come back down to 2-3%. Okay, maybe it will, but I do think we're going to get a second wave of inflation. Now, why do I think that? Well, you see, the real wages have been going down. Real wages have been going down. See, wages have not been keeping up with the cost of inflation. For the last 2 years, your wages have actually been going down. Now, that's fascinating to me. Now, why did inflation come down? What's come down? Well, let's think about it. Okay, rents are coming down for 3 straight months in a row. The rents are coming down. Oh, but that number's not really in the CPI, so that wouldn't be it. What could it be? Car prices are starting to come down. Used car prices, new cars, well, they're still inflated high, but used cars are coming down, right? Okay, so that helps the CPI number. What else? Well, how about oil? Oil's come down. It's around $78 a barrel. Now, my personal take is I actually think oil's going to go above $100. I think it's going to go well above $100, maybe even double from here. We're at $78 now. I could see oil going to $150. Now, would that make inflation come down to 2 or 3%? No, I think that would make inflation go the other way. And that's why I do think that inflation comes in waves. We've had that first wave and we hit that 9%, and now we're down to 6.5%, right? But when the second wave comes, it's going to take out that 9.5%. Now, once again, that's just my opinion. Okay, so now the stock market, let's get back to that for a moment. I think this short squeeze that we've had is almost played out. It's almost done, right? Now, I was always talk about the SPY. I thought we'd get to the 400 level. We got there yesterday. A little bit of a pullback once we got to there, but I think it can even go past that. I think it can go up to 405. I'd be surprised if it gets to 410. I'm hoping it does because I want to put a lot of short positions on this time. I just yesterday I put a small short position on, but I do want to put more on as we go up. Now, you see, you're not going to pick the exact top to get your short position on. You have to layer into it. I put some on around the 400 level. I'll put more on at the 405, and if we get to 410, I'll be just piling them on. And I think a lot of traders will be that way. I think that's why the market's going to come back in. Now, once again, your take on the market could be a lot different than mine. But I think the market's going to come back in. I think we're going to go back and take out those lows of back in November. I think they were, maybe October it was. But we're going to take out those lows and come back down. That's my take on the market. This short squeeze is almost over. Maybe a little bit more ways to go, but I think next week, at some point, we're going to get the turnaround. All right, let's move over to the real estate market now. Now, people, when I say the real estate market's going to go down 50%, I don't mean it's going to go down 50% next week. It's going to take time to play out. We're in, let's call it the second inning. We're down about 10%. But now, why do I know that the market's going to come down and not go back up? Well, you see, it's a matter of choice. Now, let's take a look at the buyers right now, okay? They want to buy, but they can't qualify. They can't afford the price, right? So they don't have a choice. There's no choice for them. Even if they want to go out and buy that house, they cannot get the loan. They cannot afford that house. So buyers do not have a choice. There's no choice for them, right? Okay, now the sellers, do they have a choice? They could lower the price down to where the buyers could afford afford them, but they don't want to do that. You see, they have a choice. They could do it, but they choose not to do it right now. So the choice is on the seller's side. Now, right now, the sellers are choosing not to lower the prices, right? Okay, but eventually, when we got this recession coming, when the layoffs are coming, the seller is going to get in a position where they no longer have a choice, where they have to sell, where they have to get out of their house because they can't pay the mortgage. Now, maybe a lot of those will go into foreclosure. Now, do you realize right now there's 1.5 million people, almost 2 million people right now are behind on their mortgage payment. Now, these are the good times. The recession's not here yet. So they're behind. Almost 2 million people are they're in jeopardy of being foreclosed upon. Now, as the recession does hit, now a lot of you will say, Mike, we're not going into recession. And that's fine. That's your take in your area. I'm sure there's going to be no recession. But you start to hear about the layoffs, all the companies laying people off. Every tech company out there is laying people off. And the layoffs get announced every day. More layoffs. The real estate industry, more layoffs. The big banks, they reported earnings and they reported that they're going to be laying off people in their mortgage divisions. They're going to shrink their mortgage divisions because they can see the writing on the wall too. They know that houses are going to come in, but there's going to be a shift, and I think it's going to be a big shift. You see, what happens when the shift happens? Okay, well, right now that seller has a choice, but when the shift happens, that seller doesn't have a choice, and that seller's going to have to sell, and that's going to reduce the prices, right? And as the prices reduce, you would be surprised how quickly the sentiment in the real estate market can change. I mean, it just goes from people, thinking about selling to absolutely want to get out at any price because they see that it's going down. As they see it's going down, they're going to want to get out. But right now, they're sitting back. They do have a choice, right? And right now, they're making the choice not to sell. Now, I think that's the wrong choice, but for them, maybe that's the correct choice. I'm not going to fault them for doing that, but I do think they're going to get out at a much lower price when they are forced to get out. You see, now I'm not saying that, that this is going to go straight down either. I'm saying the Federal Reserve, they're going to come out with programs. They'll probably come out with, maybe a down payment program for people that don't have a down payment. Maybe they'll give them the down payment so that they can buy a house. Maybe that'll be one of the government programs, right? Okay, now do you think people that don't have a down payment should be buying a house? You see, when you buy a house, you have bills, right? You have a mortgage, you have to pay insurance, you have to pay property tax, you have to pay for upkeep. Owning a house is expensive. Now, if you cannot save enough for a down payment, do you think you should be buying a house? Now, I do not, but I know our government will see it a different way, and they'll probably come out with some type of buyer assistance program where, hey, if you're a first-time buyer, we'll cover half of the down payment for you. They'll come out with stuff like this, and this will delay the inevitable come down in the prices. See, this is going to take time to play out. This isn't going to play out tomorrow, next week. It's just not going to work that way. It's going to be a year or two, and usually that year or two comes after the Fed pivots. It doesn't come before the Fed pivot. You see, the Fed pivot's going to come at some point, probably later in this year, maybe early 2024. But the Fed's not going to be able to keep the rates up at 5%. They're just not going to be able to do that. They're going to have to lower them because everything's going to be breaking. And real estate's going to be one of those things that are breaking. So as the Fed lowers the rate, as mortgage rates tend to come down, the prices are going to be going down with it. Okay. Now, you'd say that doesn't make sense. Well, that's how it works. You go back in history, you'll just see that. You look at back in 2008, right? Now, a lot of people say, Mike, why do you compare everything to 2008? Well, because we're still in the flush out of 2008. People don't get that. Yes, we've had a rise in prices, right? But 2008 never got to flush out. Now, why was that? Well, because they came and they print in 2009, they print 3.6 $1.6 trillion just to raise the housing price. And we've been printing trillions and trillions and trillions of dollars to keep the houses up. That's what we've been doing. We created the biggest bubble ever in the history of the world in the housing market. So at some point, 2008 is still going to play out. And that's why I say prices could go down to 2012 levels. Now, people think I'm crazy when I say that. They look at me so blank, like, Mike, you're just an idiot. I don't want to talk to you. And that's okay. They got their opinion. And, I'm sure in your area, prices will continue to go up. And that's perfectly fine. But this will play out. You're not going to be able to keep this bubble expanded like this. The air's already starting to come out in many areas. My area, San Jose, California, the air is coming out. Boise, Idaho, the air is coming out. Austin, Texas, the air is coming out. Look at these, down 20%. 20% is air coming out of the bubble, right? But it's nowhere close to done. The bubble is still the biggest in the world. Even with this air coming out. I mean, this bubble's so expanded on fake money. You see, it goes back to 2008 because they didn't let it crash. If they let it crash then, we'd be fine now. We'd be on our way back up. But they never let it play out. It will play out. Now, you see now the Fed, they think they're so smart. They think they can micromanage it so that we never have a a recession again. We're never going to have another depression. We're never going to have another financial crisis. Look at a recession, a bear market is a good thing. People don't get that. They think, oh my God, we're in a bear market. That's terrible. No, it's a good thing. It washes out the bad investments, the companies that shouldn't be there, that are taking all of the capital away from companies that need the capital, that are good companies, goes into what's called malinvestment. It's a bad investment. There's many companies that should not be there. They're zombie companies. They don't make money. They have a bad business model. Look at Open Door, for example. I'm not picking on, I'm picking on them, but they're going to go out of business, in my opinion, because they have a bad business model. They're just going to buy houses and flip them all across the nation. Look at real estate is very local, and I agree with that. Real estate's very local, and every market is different. And if you don't know the market, when you're out there buying on your algorithms, like Zillow did, like Redfin did, like Open Door did, these iBuyers, they're getting hurt. They're going to go out of business because they have a bad business model, and they've turned into zombie companies. They can't even bring in enough cash flow to pay the interest on their debt. These should go away. So bear markets are necessary. We need to flush out the bad investments so that money can go into good investments, to go into businesses that should be around. Look, there's going to be a big shift in this housing market. It's not there yet. I agree with you. Right now, we're just kind of frozen over. Nothing's really moving, but it's going to change. And when it shifts, it's going to shift really quickly. Now, why do I know the shift is going to be down instead of up? Once again, because the seller is the only one with a choice right now. The buyer, they don't have a choice right now. They can't buy. They can't afford to buy. Well, maybe their income will double. That's possible, right? But I don't see that happening. So I say even if they want to, they cannot. They have no choice. The choice is with the sellers. Now, they can sit there as long as they want, hoping to get the price Billy Bob got, but they're just going to sit there and they're not going to be able to get out of their house. When they have to get out of their house, they're going to have to do it at a lower price because that's where the buyers are. They're going to actually have to get underneath the market. So one of those buyers will come in and hit the bid on their house, and then they can move on. That's just how it works. And once again, this is just my opinion. I know a lot of people out there, they leave me those comments. They have a much different opinion than I do. And that's perfectly fine. I have no problem with that. Maybe I got it all wrong. Maybe I got it all backwards. It's possible, but I don't think so. If you like this stuff, give me the thumbs up. Get out there, everybody. It's the weekend. Have a great weekend and hit subscribe. I want to talk to you next week. That's a lot of excitement going on. We got the earnings season started. I love earnings season. It really moves the stock market. Okay, I'm Tall Mike. Bye-bye now.